sport that unifies the country. It doesn't matter what you're doing. If there's an important cricket match going on right now, you will stop and find the nearest television. And while watching a cricket match, you've probably seen a graph similar to this pop up every now and then. It's such an easy to understand graph. It's simple. As the match progresses, it shows how many runs a team has accumulated. And what a chart does, in essence, is take a lot of data and plot it visually. It's easier to process that way. Traders use a similar kind of chart and they call it a line chart. Now think about Infosys, for example. It moves up during the day. Markets open in the morning and close at, say, 3:30. Now, the close is the last point of data for Infosys for that day. A line chart such as this of Infosys plots the close from February 2nd through February 9th. Each day has a data point, that's the close. The horizontal axis is date and the vertical axis is price. Let's go back to the line chart we see during cricket matches. What if we wanted to know more information about each over? Say the number of runs scored during each over. How would you do that? You're using a line chart, so you really can't. For each point on the horizontal axis, the line chart only allows for a single data point. Similarly, traders need more information about a particular day. Now in the Infosys example, we were plotting the close of the day. That's the last price of that particular day. It's a line chart, it's the most basic. However, traders need a little more information, like what was the highest point that day? What was the lowest point of that day? What was the open, that's the first price as soon as the market opened of Infosys? And finally, what was the close? This is actually really popular and it is called the OHLC. Now, for example, what if you needed to know the OHLC for February 2nd? Traders came up with an excellent way to show this information. A chart that draws horizontal lines to mark the open and closing prices and a vertical line to signal the highest price and the lowest price. The result looks like this. This is called a bar chart. So for February 2nd, this point, you can see that that is the high, this is the low, the horizontal line on the right shows the close and the horizontal line on the left shows the open. In this case, the close of Infosys is much lower than the open. Hence, we can see in just a glimpse that it was a bearish day. Infosys fell on the 2nd of February. But let's admit it, the bar chart is still very dry. It gives us all the required information, but if you're seeing it for the first time, it's difficult to see if it was a bullish day or a bearish day. And that's where candlesticks come in. Introducing some more color. Here are the candlestick charts. Candlesticks are a vastly improved version of line charts. A green candlestick signifies the closing price was higher than the opening. And a red candlestick is the opposite. The closing price was lower than the open. Basically, if you see a green candlestick, that day was a bullish day. And if you see a red candlestick, that day was a bearish day. Remember, this is exactly the same as the bar chart, except you just have colored bodies. You have the high, open, close, and low in exactly the same areas. This makes it tremendously easier to spot trends. For example, from February 3rd to 9th, we had 5 straight bullish days. Isn't it easier to see? You can also garner a lot more useful information. For example, you can gauge volatility very easily. Let's compare the 3rd of February with the 9th of February. Now, both candles are green, which means that on both days, Infosys went up in price. Now, notice that the 3rd, there was hardly any activity. The body is tiny, which signals that there was hardly any difference in the open and close. Furthermore, the upper or lower shadow were minuscule in size. This shows that there was not much price movement during the day. The 9th, however, was an interesting day. We can gather that not only did Infosys close 40 points higher than the open, but it also reached a high of 2300. Perhaps 2300 was a point of resistance. We'll get into the specifics of what resistances are, supports are, and how to trade them, and even specific indicators. But the key takeaway over here is this, that candlesticks provide you a simple, visually appealing way to present a lot of price data. The chart we just saw of Infosys was a daily chart. Now what that means is that you were representing information for one full day. It was the high of that particular day, the low of that day, the close of that day, and the open of the day. But those were only 8 days. Can we see more? Sure. Here are daily charts for Infosys for 1 whole month, for 2 months, and all the way up to a full year. Notice that this chart is not so easy on the eyes. Identifying a string of consecutive green candles, for example, is a challenge. And how do you change that? Well, by changing the time frame. You see, you have 1 year of data here, and each bar is a full day. What if we change that? We can plot a weekly chart. The concept is exactly the same, except each bar now represents an entire week instead of the day. So when you see a bar here, you see the open of that week, the close of that week, the high of that week, and the low of that week. Choosing a time frame is going to be the most important decision you take as a trader. You see, when you have a system, you can usually apply that trading system to all time frames. Let's say you applied it to the 5-minute charts. You'll have multiple trades during the day, which means you'll have to sit in front of your computer during the day. But if you selected, say, a higher time frame, a daily or a weekly chart, you'll get only a few trades a week. And if you're a long-term investor and you picked the monthly charts, you'll get only a few trades a year. Generally speaking, probability increases of success when you choose a higher time frame like the daily, weekly, or monthly charts. This lesson, actually this course, is going to focus on the daily and weekly charts for investing. Now that you understand candlesticks, let's look at Infosys a little more closely and see what trends formed over an entire year in the weekly charts. This is the weekly chart of Infosys. Notice the downtrend that developed from March through June. Also notice that downtrends always have lower consecutive peaks. The trend then turned upwards from July. Notice all uptrends have higher consecutive troughs. If you pay close attention, you'll notice that in early March, Infosys fell massively on one day. That date was March 13th. It's the date the company's management stated that it expected lower than expected revenues for the financial quarter. Now, this is bad news. What do you think traders and investors did? They started to sell the stock. And then around 11th of June, Infosys management released the revenue figures. Now, although the revenue was not that great, they were better than what the management had projected. Traders naturally began accumulating Infosys stock. This in turn began the uptrend. Now, isn't this beautiful? All relevant information on price will reflect right there. All we need to do is react to it. It doesn't matter why something happens. If traders and investors feel it's important to dump a stock or to accumulate it, all we need to do is follow those footprints in the sand and make our trade. Now let's see a few more examples of uptrends and downtrends for 1 year using the weekly chart. The first one is Colgate Palmolive. You'll notice it has higher consecutive troughs. This is obviously an uptrend. It's also a fundamentally strong stock. It's 1 year of data, and that's a weekly chart. The next one is Yes Bank. It's an entire years of data, weekly charts, just like Colgate Palmolive. It's also in an uptrend. It has higher consecutive troughs. Now let's look at a few downtrends. GITANJALI is in a downtrend. It's been falling since July and we have consecutive lower peaks. The next example is of DHAMPUR sugar. It is also in a downtrend, and as you'll see, it has lower consecutive peaks as well. In this lesson, we spoke about charting, starting from line charts, bar charts, and candlesticks. You've also heard me say peaks and troughs so many times. And I know you know what an uptrend and downtrend is. But the question is this: in that Infosys example, can you short when the market plummeted? And can you go long or buy shares when Infosys started to go up in June, July? The answer is yes. But before we get to that system, we have to define what a peak trough is, called swing highs and swing lows. In the next lesson, that is exactly what we will do. It's called parts of a trend. I'll see you then.